Hello, everyone. This is Matthew Frailey with BreakpointTrades.com. We've been bringing you advanced technical analysis, market commentary, trade ideas, and mechanical trading algorithms like you see here, as well as home of the KISS systems, where it's exclusive to Breakpoint Trades. We've been doing this for 20 years for individual traders and professional institutions. By the way, guys, our KISS trend systems, you should really check them out. Go to our systems sections here, click on KISS STS tables beta. This is updated once a day after the market. The KISS systems are a trend following system that gets into the market. It gets into individual stocks. We follow a basket here, and you can see on our basket we have various things from a lot of these FANG type stocks: Amazon, Meta, Microsoft, Nvidia, Tesla, which is, let's be honest, there's been 7 or 8 stocks that have led this market all year, and as well as the indexes and other things. But we also have all the NASDAQ 100 stocks, all the S&P 500 stocks, over 100 ETFs, all the Dow Jones 30 stocks. You can use the search box to find your stocks. The STS represents smart trailing stop. It's dynamically adjusted up over time. So for example, let's click on triple Qs here. It'll bring you to a dynamic chart, and you can see today a new stop was generated on triple Qs at 339.70. And on Tesla, new stop at 220. Here's the system on Meta. The system actually went long back in November. It's raised its stop about 28 times. New stop is 253.40. So think about it, guys. As long as the market continues higher, I know a lot of people are worried about the market being overbought and some sort of big sell-off occurring. But the market could also go up for another couple months. Well, the systems will simply, if that happens, they'll stay long. They'll add new trailing stops that allow you to stay in and keep you protected. Kind of like a game of musical chairs. Once the music stops, you want to make sure you have a chair to sit in. That's what the systems give you. Or if the market were to dump, a week from now, the systems will get you out very nicely. Okay. And here's the system on Microsoft. It went long back in February, basically February 1st. Long all this time. News trailing stop today bumped up slightly from last week from 316.40 to 317.40. So there you go. Again, right now this is available on Breakpoint Trades for free, but eventually it will be locked to membership and there'll be additional memberships for it. If you're not a subscriber to Breakpoint Trades, I suggest you sign up, click enroll, click sign up now. Our best subscription is our 6-month membership. Works out to roughly $50 a month, $300 over 6 months. It's almost $30 cheaper than a monthly. So good 98% of our subscribers pick our 6-month membership because of the cost savings. Okay, so let's get started. I haven't given you a video update on the market since last week. So this is a state of the market technical overview for June 12th, 2023. This is our back-end newsletter recording. So let me get this started. Hello, everyone. This is Matthew Frailey with BreakpointTrades.com. This is the Monday, June 12th newsletter. Tonight's newsletter, as you can see, divided into 8 major sections. The first thing I'm going to be discussing is some of these trade systems, like our SPY breakout, which has been long since June 1st, I think, the KISS systems and other things. Then we'll go ahead and look at the market news, the market what transpired today. We'll look at various news items. We'll review the major indexes, examine a few sector charts. We'll look at various commodities and overview of bonds, US dollar, Bitcoin, precious metals, gold, silver, GDX, and of course going to follow up on recent trade ideas. I did not add any new trade ideas this evening. I think the market's a bit extended here, so I didn't really want to add any new longs. Again, as far as the market, as you know, today, once again, a strong follow-through rally on the market. Basically, the Energizer Bunny keeps going and going. You remember those old commercials? So it's kind of how the market is. And really, again, that was all really started in vogue by, the AI stuff with NVIDIA, and this year 7 to 9 stocks have generally led the market, though lately we're starting to see other participation, which is good. Today the S&P gained 0.9%, the Dow about 0.5%, the Nasdaq added about 1.5%. Now, noteworthy today, guys, is the VIX and the S&P were up. The VIX was up 8.5% along with the S&P. Now, obviously, there's hedging going along before the CPI. Remember, guys, the CPI is tomorrow morning, 1 hour before the open. So that's a big one. Obviously, hedging there. But whenever you see the VIX have a big rally with the market, a lot of times, more often than not, you'll get a pullback the next day or so. Now, I'm not looking for a big sell-off in the market, guys. The trend is up. Volatility is what leads the market, and liquidity is what leads the market. I'm sorry. And liquidity, I think, is down tomorrow, but then it goes up again later in the week. So I wouldn't be surprised to see a short-term pullback and then maybe another ramp again. Okay. And on the weekend, we talked about this liquidity. Liquidity is what drives the markets, guys. Why? When did everything tech bottom? January 4th. When did the reserve balances bottom? Same day. Nearly $500 billion in liquidity added since the massive run up from the banking crisis. Liquidity is the driver of the markets. Okay. Again, since inception, the Fed had planned to reduce the balance sheets, QT, quantitative tightening, by $750 billion to this date. But instead, they've added $100 billion in QE. Remember, all that excess money, QE, basically filters back into the market, and that's one reason why the market has done what it's done. All right. Again, these are the key items, news items for the week: CPI, FOMC, PPI on Wednesday, retail sales Thursday, and these items on Friday. Next, before we get into the general market analysis, now let's look at the systems here. So this here shows you the reversion to mean SPY system trades for this year. There's been a lot less trades this year, reversion to mean systems, because the volatility has been low on the market. Look where the VIX is. Okay, but these are the trades it's done this year since 2023. The breakout system, it's not really reversion to mean, but I include it with the SPY systems. It went long on June 1st on SPY, and went long at 417.50. So currently, I think SPY is up around 435. Now the hard stop is at 419.50. So it's a little over entry. It's right, if you look at the chart below the table, it's right near the parabolic SAR. But if market continues higher, that stop could ramp up quite a bit. But again, the system's been long there since June 1st. Next, moving on to the KISS system. So image number 3 shows you, some of these major big cap tech stocks with the KISS system. So the triple Qs are on the upper left. There's a new trailing stop there. It's cut off there because of the image, but you can see we got a new one. The magenta color means it's new for that day. If you wondered why they're white and you see a magenta, that means it's new for that day. So you can see Microsoft, new trailing stop, STS, smart trailing stop, 317.40, jumps up from 316.40. Meta didn't jump up very much, pretty much to the same place, 253.40, went up 30 cents. And Tesla jumped up from 214 to 220. All right. And you can see the Tesla, it went long there in May. Nice trade so far. The Meta went long back in November, I think. And again, the thing about the KISS systems, they're trend following systems. Obviously, they do better in trending conditions. But the nice thing about them, if you're in some of these stocks and you want an idea for a trailing stop, here you go. And why is that important? Because, let's say the market tops out, tomorrow. Well, you have your stops in place, your protection. What about if the market continues its insanity, its Energizer Bunny mentality, and goes up, for another 3 months? Well, the systems will stay long. We'll catch that move and keep you in the trend, and we'll continue to raise your smart trailing stops. So why guess? That's what's nice about the systems. You don't have to guess about it. Again, they're not perfect by any means, but they're pretty good, and they're exclusive here to Breakpoint Trades. Next, image number 4. This table shows you what I call the, mega, you could call it Magnificent 7, Magic Ball 8, Mega 9 stocks. These are the big cap tech stocks that have led the market. But here's how the KISS systems would have done on these particular stocks. So collectively, they'd be up 54%. And I'm including the Qs there. I really need to remove that. But, Microsoft, it would be up 31% from when it went long there on February 1st. NVIDIA up 133%, Meta up 131%. So really nice moves there. Next, let's go ahead and move back to the general market. So image number 5 shows the index sector table, what transpired today. Again, you can see what the indexes did, which I already covered. NASDAQ area led once again, up 1.5 to 1.13%. The Dow and Russell lagged, but they were up. The major market sectors, not as broad rally as you would have thought today. Still, some weakness there in banks, financials, brokers, energy, consumer staples, utilities. All the other sectors were up, but it wasn't a broad-based rally where all the 21 sectors here were up. US dollar just almost flat, just up a tad. Crypto still remains weak. That definitely has not been participating with the market. It's out of vogue. And commodities here, kind of a mixed bag. Crude oil down 4.3%. So that really drags down the DBC commodity index. Gasoline down 3.9%. You probably don't mind seeing that, unless you drive a Tesla or something. Don't care. Copper down 1%. The ags did okay today. Corn up. Now, one thing that's not on here is uranium. Had a great day. Precious metals were mostly down, but the gold stocks were slightly up, half percent. And if you look at the bonds below, 10-year, 30-year up 0.5%. Next, item number 6 shows the economic news calendars. I already discussed this, but as I stated, tomorrow morning, CPI is the big one. It comes out 8:30 Eastern Standard Time, 1 hour before the cash market opens. It's going to be a big one. There's a lot of news items here in the docket this week, guys. Be aware of that. Okay. FOMC is on Wednesday. Widely anticipated that they're going to pause. Okay. They're not anywhere close to starting cutting rates, guys. Okay. But market's obviously rallying a little bit on that too, anticipating that pause. Next, image number 7. This is from Fred, St. Louis Fed, and this overlays the S&P 500, which is in red, and basically the Fed, their whole balance sheet represents liquidity. And if you look here, you have a very good correlation with liquidity and the S&P 500, the market. So quite simply, guys, the market is not going to have a big sell-off really until liquidity starts to dry up. That's what drives the market. Next, chart 8, here's another view of the liquidity, and I took this back to 2020. And again, you can see the S&P 500 in red, the Fed liquidity in blue, and you can see they just basically lockstep match. So it pays to follow what the liquidity is doing. That's what drives the market, guys, and it is what it is. Okay, let's go and jump to the index charts. So image number 9, this is a weekly chart of the major indexes. Again, it's only Monday, but just showing you where things are, a bigger picture. As you know, we had that bear market in 2022. We had the trade low in October 2022. Since then, we've had a pretty good rally up here. The Dow has lagged this year. It's still in this it's in a larger coil at this point. S&P's really had a nice move up here. We're monitoring this upper trend line. And NASDAQ, they just continue to power up here. And the IWM at the bottom rallied off the lows, but it's still overall, lagging the other indexes. Next, chart 10, here's a weekly view of the S&P. Again, you can see we're kind of up in this resistance or supply zone. Again, it's a zone. So this is an area where the market could, struggle anytime. It could fill it. It could also go to the upper channel. Again, the trend is up. We are a little overbought, but again, if you don't want to worry about that, you can follow the KISS systems. And the S&P decides to go up to 4,500. Well, the systems will catch that. The market decides to have a, puke before then. The systems will get out. Our general theme on the market has been, we could see a pullback here short term anytime, but we don't think there's going to be a real big correction in the market until maybe sometime late July, early fall, something like that. Next, chart 11. Here's another weekly chart. Shows you the same chart essentially. One thing we're monitoring is this rudimentary cycle here. Again, it's not perfect, but some of these cycles have matched highs and lows in the market, and you can see it projected a low in there in March, which was essentially correct. It shows a peak there sometime in later June, early July, so we'll see if that ends up playing out or not. Otherwise, we could also monitor this channel. Upper channel trend line, we're a little now above that 61.8 fib retracement. If we continue to power here, my next target would be up around the 4,400 area. Next, chart 12. Here's a daily view of the S&P. Again, as you know, price was following this expanded megaphone type pattern very well. Finally broke out of that in early June. Tested this other channel, chopped around there for a little bit, then finally busted out of there in a big way today. Strongly taking out that 61.8% fib retracement. Again, that's retracement from the 2021 highs to the 2022 lows. Okay, you can see there's also another channel here via the dotted lines. Whether we get up to there or not, 45, 44.50 or whatever remains to be seen. But we did break through this resistance area. There is no divergence here. We are quite overbought here in the short term, but again, price action is king. Next, chart 13 is another daily view. So shows you the same thing. Our first target was filling that open gap from August of last year, which was, filled about 2 weeks ago. We rallied higher. Our next target was taking that 61.8 fib retracement off the January 2022 highs, and we've now managed to hit that. Again, the next target would be this upper channel line up here around 4,400. There's also a big supply zone up here between this and 4,500. Wave count perspective, the bullish view, if you're in the bull market camp like CNBC, it would be this would be wave 3. Okay, wave 1, 2, 1, 2, 3. The other views are, this is a wave 5 of some any diagonal. It's a wave C, whatever. They all pointed out to they all pointed to higher prices, and they've been playing out. But otherwise, on a further move, these would be my targets. Testing in that upper channel, dotted channel line. Next, chart 14. Here's the daily KISS system. So no new DVT. This should be STS, smart trailing stop. No new smart trailing stop today, but I imagine we could see one maybe as early as tomorrow even. This did ramp up last week. Again, the nice thing about this KISS systems here, what they do is they try to trend follow. They give wiggle room. They try to give enough wiggle room to not be stopped out on noise, but are tight enough to, keep you in a trend. And when they do trigger, usually you're only several percent off the high. So again, getting a little overbought. You can see the RSI here. The moving average ribbon's getting wide. Next, chart 15. Here's the 4 time frames we like to follow. So you can see we busted over these resistance cycles lately. Price just continues up. Now on the 130 minute, we got a little DeMark 9, so take note of that. Otherwise, ATR is supporting all these time frames. Next, chart 16. Here's the half-day chart, 195 minute. See this expanded coil megaphone, which we busted out last week, held it as support. You could also have drawn another one, which we're trying to take that out too. There's no MACD divergence on this time frame. RSI is a little overextended, but let's take a look at some smaller time frames. Chart 17, here's 120 minute chart. We've shown this channel last week, trying to break up over the channel. We'll see if we can hold that or not now. No real divergence. There is a little MACD divergence on this time frame. See on the MACD, again, that could be negated on a further melt up, but for now there is a MACD divergence there. Next, chart 18 is a 60 minute view. Again, you can see the same channel. We've essentially flagged out busted out of it. Again, we do have the MACD diversion, so be aware of that. Finally, chart 19, here's a 30-minute view. This is a good guide. Nice clean channel. So we're still holding this channel line fine. That's something to watch if we start to pull back, say tomorrow. Next, moving on to the triple Qs, chart 20. Here's the triple Qs daily. We've been showing this steep uptrend channel. We've been tagging that uptrend channel line. We get little pullbacks, but so far the pullbacks have just, been to the 9 EMA at best. Another bounce today to retest that upper channel line. Slight RSI 5 divergence at this point. Hell of a move in these Qs this year. Next, chart 21, here's the triple Qs weekly. Again, you can see the same channel. We're in this supply zone, which extends from here all the way up to almost basically that 369 area. So still some room if it wants to get up into there. You can see the 14 RSI is now overbought on the weekly. Nice buy signal on the moving average ribbon when it flipped and then pinched there. Next, chart 22, here's the daily KISS trend system. This one did get a new smart trailing stop. This says DVT, but it's smart trailing stop. 330. Anyway, it's on the website. Sorry guys, this is kind of I took my image and it was off the scale here. But if you go to the STS tables, you'll see it there. Again, nicely protecting the profits. I like how it went long there in early March and then it stayed long the whole time. And the stops here have been given enough wiggle room to not get hit on noise. Again, the system's not perfect. You can see it went long there in January, was long for a good month, and it got out, but then it righted itself, got back in. All right, that's what they do. Next, chart 23, here's the 4 time frames. Again, you can see how price busted over these resistance cycles. Whenever you break over a resistance cycle, it's a breakout, guys. That's bullish. So that occurred in May on all these upper time frames. We've been just trending strongly up. We bounced off the support cycles last week on the 130-minute, 78-minute, and just been moving up. Next, chart 24, here's a 2-hour view. You can see this channel. This is the channel I've been showing since last week. Again, every time we've hit the upper channel line, we've pulled back, and we're nearing the upper channel line again. This next move, the MACD is lagging a lot. Look at that. You can see the MACD is nowhere close to those recent highs, so we do have a big divergence there setting up. Next, chart 25, here's the 30-minute view. Again, as you know, we bounced off that demand zone last week. Next, chart 26, IWM small caps. Again, this ABCDE pattern we've showed from back in April has played out. We held that lower trend line. I said it was a good area to go long with a stop. Could be raising your stops. It's got into this supply zone. Remember when we've been counting this as wave E. Now, short term, to me, it looks like it's trying to flag here. Next, chart 27, there's the weekly view. You can see how long term it bounced off this supply zone or demand zone down here. Next, chart 28, here's a 60-minute chart, and you can see how it's potentially trying to flag here. MACD's recycling, so if market has another little pop, this is when I would be looking to go long. Next, chart 29, here's the KISS system. So the IWM, remember, it's lagged this year. It went long last week. So while the other indexes went long back in, March, essentially, and with a lot of the FANG names going long much earlier than that. But you can see it went long last week. Stop is still at 176.50, giving it room. You can see how the system was long there back in January, then got out in February. So that does it for the major indexes, guys. Check on futures. ES futures are up 1 point, so really no movement tonight. Again, the CPI tomorrow. Let's move on. Chart 30, here's the VIX. Now, this is the big standout. So we've been following this VIX. First off, the VIX, these 2 buy signals on the VIX from back in May. You had 2 of them when it was above its upper Bollinger Bands, closed back inside. Were excellent buy signals. Look at the S&P there, rallied from the 4100 area all the way to 43, 40 where it closed today. Now the VIX did close back inside its Bollinger Bands last week for a little sell signal, but so far the VIX went lower and the market went higher. But look at what we got today. Very interesting. Big move in the VIX, up 8.5%, along with the S&P up. A lot of times when you have a big up day in the VIX and the S&P, many times the following day is a down day. So be aware of that. Obviously, people positioning, hedging ahead of the CPI. But that's, again, this big inverse move here to the market is noteworthy. And you can see the correlation here. So the VIX is now spiked to the end correlation. So that's when you get inflection points. Next, chart 31, here's the weekly view of the VIX, just showing you where you're at. The VIX is all the way down here into, essentially early 2020 levels. Next, chart 32, here's a 60-minute chart of the VIX. I was showing this last week, this 5-wave pullback bullish wedge, and that wedge played out despite the market rallying today. In fact, I had bought call options on the VIX late last week. I held them and they were up nicely today despite the market being up. Normally they'd be down when the market's up, but again, the VIX moved with the market today. So short term, that has me very cautious. Next, let's move on to some market sectors. We'll just cover a few of them here. Here's the XOK technology. Again, as you know, it's struggled in the supply zone, kind of flagged out. Now it's pushing up through it. Not surprising. I mean, it's basically almost completely reversed its 2022 pullback. Next, chart 34, semiconductors. We mentioned last week they were forming a bull flag off the 9 EMA. That's been playing out. Next, chart 35, transports. They've been moving up. Next, chart 36. Again, not all the sectors were moving up today. Banks were weak, financials, energy, industrials here. They broke out of their little channel coil last week, continued moving up nicely. Next, chart 38, retail. Remember that had a big sell-off in late May, bottom there on June 1st off that doji. Really nice move up here and looks like it's trying to flag. Now, what hasn't rallied with the retail? Woke Target. Look at this. Target didn't even bounce and hit its 9 EMA and made another low. So Target, despite being in the retail sector, continues to struggle big time, along with Bud, though Bud had a better bounce than this. Little RSI divergence here now, so maybe it could bounce sometime soon. Next, chart 40, real estate. Next, chart 41, home builders. They continue to ramp up. Again, housing market still remains strong because supply is low despite these interest rates. Next, chart 42, XLE energy. Energy names are weak here today, along with that crude oil. Now let's go ahead and move on to the commodities. Chart 43, this shows DBC, the commodity index. This is the weekly chart, and then just showing this for the bigger picture. It was down today again, nearly retesting that 200-week moving average. Next, chart 44, crude oil, big dump today, down 4.3%. Kind of had a bear flag setting up here. Continues to look weak here, guys. Again, it's well below its 200-day moving average, which has been resistance all year. Next, chart 45, natural gas, up 0.5% today. Essentially, it's trying to base out here. It's got a good 5-month base. So, I'm just going to monitor it. Eventually, this will be a decent long probably, but you need a trigger. Natural gas is one of the tougher traders out there. They call it the widowmaker for good reason. Next, chart 46, copper pulling back a little bit, logically stalling a little bit at this 200-day moving average as you'd expect. Next, chart 47, there's the weekly chart, shows you the longer term support. Next, chart 48, DBA, agriculture. This has been one of the stronger areas of commodity. Broke out of that channel flag last week. Next, chart 49, there's the weekly. Again, you had basically a weekly bull flag, moving average ribbon pinch. Everything looked really good on it. And, looked good. It looks good here. This is one of the better looking commodities. And let's take a look at another one. Chart 50, uranium ETF. This area has been super strong. Really nice rally. I love the monthly view of the uranium chart. Let's take a look at that. So chart 51, here's the monthly chart of uranium. Just look at this textbook pattern on the bigger picture view. Declining volume. You had that huge run up in 2021. Consolidation on light volume, moving average ribbon, consolidating, pinching, just everything set up. Uranium's up 13.5% this month already. If this plays out, I could see this going well into the 30s. CCJ is a uranium stock that's done extremely well. Congrats if you've been playing that. Next, chart 52, moving on, here's the 10-year treasury yield weekly chart. Again, it's up 0.5%. Still in this big old channel we've been showing for a while, but it's holding in there well. Next, chart 53, there's the daily. You can see the channel. Again, moving averages here now, your support. Is it going to break out of the channel, or is this an area to pull back? FOMC will likely be a catalyst on this. Next, chart 54, TLT 20-year bonds. Again, been in this little downtrend wedge-like pattern. I am looking for a potential move up out of here, so let's take a look at the 2-hour view. Chart 55, there's the 2-hour view. We showed it in this falling wedge. It broke out. We have a higher low, potential wave B. Nice move up today if you're long, which I am. I moved my stop up to this area, this last higher low, 101.10 essentially. Next, chart 56, high yield corporate bonds. Now they were down a little bit today. Take notice of that. Remember, the market generally moves with that. Chart 57, here's a 60-minute chart. We have a potential wave count on here. Now this wave count could have this little wave 5 ending, and that would be notable, and that would lead to a little pullback here. You could have a little bear flag here, so be aware of that. That would also line up with the fact that the VIX rallied today, and I'm looking for a short-term pullback. Again, we'll see the reaction tomorrow on the CPI. Next, chart 58, Bitcoin. Bitcoin, again, has not been rallying with this market. We illustrated this as the head and shoulder pattern back there in April, May. It's been essentially playing out. Right now, it's on a little downtrend channel. Next, chart 59, gold, US dollar, up just a tad today. Quite honestly, it has a little ABC pullback, 3-wave. I could easily see this trying to rally again. But again, this will obviously react on the CPI and the FOMC. We'll see which way this breaks. That'll affect gold and precious metals, so let's move to that. Chart 60, here's gold. Gold was a little bit weak today. It's still holding this uptrend channel line. We'll see if it ends up holding that or not. Again, we expected weakness in gold coming into May because of the rising wedge and seasonality, and that has played out. I am expecting another big rally in gold this year, but I still think it may be pushed off until July. Next, chart 61, there's the weekly chart. Again, gold logically pulled back off that triple top resistance. But I do believe later this year it has potential to break out of that. Next, chart 62, silver. Bounced, stalling at the 50-day moving average for now. Expected. Next, chart 63, GDX, gold miners. Nice sell-off there in May. Little bounce up. Trying to hold this little channel. If it's going to go up again, it really needs to get going. Let's take a look at the 60. Chart 64, there's the 60 minutes. So you can see this little pattern. If one is long GDX, my stop would be right there at that 30.78 area. It needs to go now. It has no business taking that out. So if I'm long a little GDX, that's where my stop goes. Guys, following up on trade ideas. First off, cover some of the big FANG type names. Apple, just again, what can I say? Continues and its ever-ending uptrend. And the KISS system's long with a stop. So if you're long Apple, you can see where the KISS system says, but this is the channel we are in. Next, chart 66, Tesla just continues up and up. Big gap up last week, up a little bit today. And, essentially had a 3-wave pullback there into May. My symmetry target's up there around 260. That's only a hair's breadth away. Again, if we look at the KISS system, there's a stop at 219.80 if you want to know where the KISS system is. Next, chart 67, there's a 2-hour view with a wave count. Appears we're working on some sort of wave 5 here, perhaps. Next, chart 68, NVIDIA. You know, this had that big move up on the earnings there in May. The pullback, again, was a bit extended, but the pullback held that 9 EMA. And KISS system, stop at 351 at this point. Next, moving on to other setups, chart 69, SYM. This is a long idea of ours last week that was on a really tight coil. Hell of a move. I commented this morning when it was up. Consider taking some profits. Hope you did. It has a heck of a pullback. Again, that was a really strong move out of that coil. Was a logical area to be, take that trade off. Next, chart 70, IPI. Really nice move out of this bottoming pattern. This was a long idea of ours back in early June. You also had a perfect MACD KISS stochastic oversold setup. Next, chart 71, CELH. As you recall, this was a long idea of ours back in May. We identified that as a fourth wave. We said it was a lower risk long. You could have went long right there on that doji at the 20-day moving average with a stop. And if you didn't exit on that fifth wave move, my stop at this point would be that last higher low at 136.18. Okay. That's also where the KISS system would have its stop. Next, chart 72, SEMO. This has been a hell of a runner. I had it as a long idea in May back there at 53.63. 55.65 was my resistance. Just went straight up vertical. Again, I'm out of it, but if anyone had stayed in that, congrats. Next, chart 73, there's the weekly chart. Why did it have such a rally? It essentially rallied off this double bottom demand zone. Now it's into the supply zone, so I would obviously be locking in some gains. Next, chart 74, Plantier was a long idea of mine back in May. Beautiful breakout, hell of a move. Again, just trail your stops up at this point below the 9 EMA if you want to give it room. Simple. Next, chart 75, Tier was a long idea, tight coil, which busted out last week. Big move today. Looks great. Volume's good. We'll see if it now can take out these, recent highs from February. Next, chart 76, the mouse, Disney. That wedge played out. Again, my stop now would be around this higher low, just below 92. Next, chart 77, SDA. This was a wild one I put out over a week ago. Big move up today, up 23%. Again, you can see it's been wild. It rallied up to 45, came all the way down to $10. So I expected some volatility. This one isn't for the faint of heart, but if you're a day trader, gave you a nice trade. Next, chart 78, American Airlines, a long idea from last week, busted out last week, moved up into that supply zone, pulling back from there. That was a good area to take some profits. Next, chart 79, ADMA broke down for a short, was a nice coil setup. We like coils because they produce strong moves. That played out. Next, chart 80, Note, long idea that's from last week, trying to break out here a little bit. Next, chart 81, Quad C, still has this nice base. Hasn't busted out of here, but I'm still watching it because I like these basing type patterns. Next, chart 82, Boeing. I posted this last week, broke over that resistance trend line, moving up again. Chart 83, SE, long idea from last week's, moving up to the moving averages here. This is an area to take some profits. This isn't coming out of a base, so I'd be looking to exit this puppy. Next, chart 84, BBAI. It's an AI type play. Still monitoring this kind of wedge into the 200-day moving average. All right, guys, that'll do it. Again, we'll see what the old CPI numbers are tomorrow. And thank you for supporting Breakpoint Trades. And if you're not a subscriber, consider subscribing. Appreciate the support. And that'll do it. Take care. Have a good night.